Testing, testing. We're going to start in about 5 minutes where we're going to talk about volatility and how to use it for investment purposes. Can everyone hear me okay? Okay. So let's begin. The event that has occurred, the black swan event, was pretty much happened with a lot of volatility. Markets drastically went down, and then if you look at it, they bottomed and they kind of went up drastically. This is all with volatility. Not a lot of trading opportunities with a lot of systems have pretty much occurred at all. Everything has been investment purposes from a volatility perspective. Volatility, a lot of people think just comes and goes and it's not normal at all. However, volatility is here to stay. With the age of computers, with high frequency machines, automated strategies and everything, volatility is going to be here and it's going to be here for permanently. And black swan events that you saw that occurred due to the virus are going to start becoming normal in the stock markets across the world. It also will be for crypto, for currencies, bonds, futures, and so forth. So you have to learn how to start looking at volatility, measuring volatility, and how to take advantage of it, which a lot of people don't know how to do at all. In fact, I put a link in the chat where we're going to have a workshop tomorrow on volatility and how to use it in a trading system, which no one really does do at all. And I'm going to give you a glimpse of that today. I'm going to show you how to use volatility for investment purposes. Most people think volatility is only used for short term, more towards day trading and scalping. However, that's wrong. You could pretty much use volatility for any type of trading that you want, from scalping, day trading, investment, and so forth. And the reason why is that a strategy is not dependent on a type of trader. The type of trading you're doing depends on the time frame. So if you take the volatility strategy and use it on a weekly time frame, it's now for more towards investment. If you take it and use it for a 10-minute time frame, it's more for day trading. If you take that strategy and use it for a 4-hour, then it's more towards swing trading time frame. So let's get to the example, the case study I'm going to go through. Before we do, since this is public, this is our normal disclaimer to state this is for education use only. We're not soliciting buy or sell a particular instrument. If you do so, you do that at your own risk. All information is owned by EII Capital Group. It cannot be copied or distributed without our written permission. We are broker neutral out there. We do not sit there and support one particular charting or brokerage platform. Today, we will be using TradingView for our charting. So let's go straight to the charts, and I'm going to show you what my charts look like. So give me 1 second. Okay, hopefully you can see my charts here. I'm going to go to the chart, and boom, there we go. So here is a volatility chart. Okay, you could see there's Haki-Nashi up here. These are not regular Haki-Nashi candles at all. This has been modified drastically. We're using Haki-Nashi here to look at volatility and measure volatility, but the Haki-Nashi by itself, just like with every other indicator, does not work. Okay, you have to have money management built behind the system along with some other tools and everything. So what we've done is we simplified the process by adding our own indicator here and modifying the Haki-Nashi into our own trading system. And that's kind of what you see here, okay? Something simply put, when you see these purple bars, those basically are signals for possible entry. And you could see this purple bar here, and you could see the blue dot here is the entry, and you could see that there, and there's a target right there. Okay, so you could see here, this was Microsoft was a bearish trade here that triggered March 9th, and the target was these blue crosses here, which was pretty much $138. The reward risk for this trade on entry was 14 to 1. Okay, so that automatically prints the reward risk going into the trade. So you could see going into the blue crosses, this is a 14-to-1 reward risk or 1400% reward risk. It got there very successfully. Now, the key thing that we have in our trading system is these black TNT bars. We call them TNT bars. These are named after my kids. Okay, so this is the black TNT bar. It indicates a possible reversal. And when you see this black TNT bar here, right at a profit target, that's a huge indication that basically what the volatility that brought you down has a high probability for the volatility to reverse. And that's exactly what happened here. You could see basically the entry dots were right there. We entered a trade here on April 13th, and you could see our target is all the way up here to these purple crosses, and we're almost there. So the key thing we're going to be discussing tomorrow night in our launch are the system, the strategies, where to enter, how it measures volatility. But the most critical thing to see is these TNT, black TNT bars. Most people use doji patterns in the candlestick world. We don't use doji at all in our world for volatility. We sat there and came up with this proprietary formula, which is this black TNT bar, which indicates a possible trend reversal. And if you've been watching me on social media, you've been seeing that I've been using these black TNT bars for various parts of chart patterns, for trend reversals, from double tops, double bottoms, and so forth. So this bar here, you used correctly, can sit there and signal trend reversals. And the key is that we're using this not for little trend reversals, but using this in conjunction with money management to make sure when it does reverse, it does have enough reward in there based on the risk that we take, where we could sit there and make 3-to-1 reward risk ratio or higher. Remember, everything we do is based on money management. Our foundation is money management. So all the technical systems and everything that are built for us are built on top of money management. Just because this reverses doesn't mean we're going to sit there and take it. We want to sit there and look at this reversing, but we also want to look at the potential reward risk. And that's what these colored bars are going to do in the launch tomorrow. Again, if you're interested in looking at the launch tomorrow, there's a Zoom meeting where you could pretty much attend. Hopefully you guys like this, but this gives you a little glimpse on how you could use volatility for more towards investment type of trading on social media. I did post a chart earlier today where you could use it for, I think it was more towards swing trading. And a couple of days ago, I posted where you could use it towards scalping or day trading on a 3-minute time frame for E-mini. So it doesn't matter the time frame or the instruments at all. The systems, everything we built does not discriminate on time frame or instruments. So you could pretty much use it for whichever way you want. But you could see everything is simple on the front end to make the system very easy to be able to be implemented. And on the back end, it has a lot of intelligence there. Okay, that's it. See you guys on the call tomorrow. Have a good day.